Our next chart is for a small company called Goals, which operates football centres around the UK, and it's an absolute brilliant little company. We have held shares in these before, but we sold them way too soon. But anyway, that's another story. Goals was in a downtrend for some time, hit hard by the credit crunch. Lehman Brothers was a big shareholder and went under. It put in a double bottom, and since then the trend has been up. We've put in a trend line, and this is quite an important trend line because we believe that is pretty much the average of this uptrend. Now, the reason why we're showing you this chart is goals has really taken off. But the way that it's taken off is so steep that that cannot be maintained. We always say to go with the trend, but when the trend is that steep, you must not buy into the shares. We would never buy goals at this price. We would want to see a big pullback and a technical reason that there may be support on that pullback before we buy into this sort of setup. And to buy shares in this company, what we would probably want to see is the pullback come back to the original trend line. The way that this has gone up so quickly, it hasn't actually given us many resistances. So if there was a pullback, we haven't got too many support lines to draw until the price goes down quite a bit. So we would not touch goals until it hits that ascending support line again. Then it would be a technical buy. Gold is coming up to a horizontal resistance. Now, some traders might want to short sell gold at that price. We would say never ever go against the trend. Even though you may get a pullback at that horizontal resistance, you do not want to be going against the trend. So we would have to watch and wait on gold. We would not have a position. We would want to buy the dips if we did have a position, but we certainly would not be selling because we think gold has gone high enough.